channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, do your boy a big favor. Smash that like button for me. Smash that like button for me. Also, just keep in mind, guys, a lot of scammers, a lot of spam down in the comment section of these videos. So please be careful. Don't get yourself scammed. Don't fall for any of the shenanigans. I don't want any of you guys to get scammed. So I will never ask you to contact me by WhatsApp or Telegram or any of that stuff, right? The only way you contact me is through the description box of my videos, right? Those are all my legitimate links to contact me, whether it be my Instagram, which is Richard Fain Millionaire Mentor Instagram page. That link is down in the description box. My website address is down in the description box. My Moo affiliate link, my Webull affiliate link is down in the description box. Facebook is down in the description box. So if you want to contact me, guys, on any of the platforms, you got to go down to the description box. Don't go out on Instagram trying to type in Richard Fain, because you're gonna get about 100 different Richard Fains and all different variations, and it's going to confuse you. So the best thing to do, if you want to follow me when I'm not on YouTube, go down to the description box of this video right now, and that's what you click on, and follow me on Instagram, and then send me a DM to let me know you're rocking with me so I can say thank you. Do me that big favor. I'm trying to get my Instagram following up. My old Instagram page had over 90,000 followers. That page was disabled back in December 2023. So I created this new page, which is Richard Fain Millionaire Mentor. And right now we got about 6,500, matter of fact, yeah, about 6,500 followers. So it's slowly moving up, but I'm gonna continue to talk about it. So at some point we'll get the thing up to where we want it. At some point in the distant future, could be 1 year, could be 10 years, who knows? It depends on you guys. If you guys want to follow me on Instagram, if you want to follow me on Instagram, get down in the description box and click on the Instagram link, Richard Fain Millionaire Mentor Instagram link. Do your boy a big favor, give me a follow, and then send me a DM to let me know you're rocking with me, so I can say thank you. Next piece of business, website, www.richardfain.net. Second link down in the description box. Do your boy a big favor, go check out the website. Over 300,000 of you guys have already checked out the website. Over 1,000 of you guys have purchased digital products to make an investment in yourself, get you a little knowledge, and you can turn that knowledge into execution. So we got wonderful, wonderful digital products on the website that can help provide information for you that you can then turn around into execution. So please do that. Also, if you want to join the Wealth Builders, the fastest growing financial community on Patreon, we got over 1,000 Wealth Builders in 4.5 months. That's right, guys. We got over 1,000 people on the financial community on Patreon that's going bananas. We're having a good time. We're long-term wealth builders, traditional investing, long-term, buy and hold, long-term, big boy blue chip. That's what we do. ETFs, individual stocks, index funds, that's what we do. We build wealth long-term. Nobody's in this thing for a quick get rich. We understand that don't happen. If we're gonna build wealth, we're gonna have to buy good assets, big boy blue chip, and hold them long-term and allow them to mature. We're not going to try to act like we're traders, like a lot of the soybean billionaires in the chat try to act like they're such great traders. If they were such great traders and made so much money, they wouldn't be in here. Trust me on that. Trust me on that. If you were so good at trading and making so much money, soybean billionaires, you wouldn't be in here, baby. You're in here because you got nothing else better to do with your life. Bingo. So having said that, get yourself over to the website, check it out, and make an investment in yourself. And also join us on the Wealth Builders. Hey man, it's fantastic over there, guys. Trust me, 1,000 people going in the same direction, right? And by the end of the year, we're gonna have 2,000 in there going the same direction. Why? I'm consistent. See, I'm going to be on here every single day, 365 days a year, preaching this financial gospel. And I'm going to find my group of people out of that 4.5 billion people who have access to the internet. I'm going to find my share of them. And they're going to come rock with me. Why? Because I'm consistent. I don't change up who I am. And I haven't changed up who I am in 4.5 years while I've been doing this. And I'm not going to change it up for nobody. People can appreciate that. People can appreciate somebody that just tells the truth. Wealth is not easy to build, because if it was, everybody would be wealthy. There's a reason 1% of the people in this country are wealthy. There's a reason, because it's hard. It ain't easy. You're going to have to change some stuff in your life. You're going to have to give up some stuff to get some stuff. That's the way it works. Now, if you're willing to do that, you can build wealth. If you're not willing to do that, you won't build wealth. You'll be in the chat acting like you got wealth. So yeah, man, get yourself over to the website. Check us out. We have a good time over there in the Wealth Builders. We'd love to have you. All you got to do is go to the website, second link down in the description box. You're going to see something that says membership or join here. And then just click that button, man, and come join us. We're waiting on you. We are waiting on you to join our financial community, the fastest growing financial community on Patreon. And why is that? Because we're helping people. See, when you help people, you don't have a problem with people congregating around you when you're giving off help, when you're trying to help somebody achieve something. People can appreciate that. So that's what we do over there in the Wealth Builders. So come join us. Last thing, and then we're going to dive into the topics today, and that's going to be Moo. Y'all know that's my self-directed brokerage app that I'm going to use over the next 10 years to 10x the net worth. And we going to 10x it. I ain't worried about that. Been doing this for 30 years, guys. I'm telling you something. You buy big boy blue chip. This is my opinion now. I'm not giving you financial advice because I'm not a financial advisor. But what I will tell you is my 30 years of experience. If you buy big boy blue chip and you hold them and you just keep on holding them, eventually, long term, you build wealth. Big boy blue chip companies, guys, they're going to grow. You just got to give them time. Nvidia will grow. Serv Robotics will grow. S&P 500 will grow. FTEC will grow. Mag 7 will grow if you give them time, right? If you give them time. That's why I say you got to be traditional. You got to buy and hold, big boy blue chip, and you got to go long. When I say long, I'm talking about 3, 5, 7, 10, 15, 20 years, whatever it takes, guys. When I was 26 years old, I started my journey. At 50, I was done. Plenty of wealth, go buy any car I want, live in any house I want. I was done. I walked away from a mid six-figure income to do what? Make YouTube videos. Why? Because I had assets. So it can work if you give it an opportunity to work and stop trying to find shortcuts. That's the problem with most of us. We want to try to find a shortcut. Ain't no shortcuts, guys, in this life. I don't know why y'all think it's shortcuts. Ain't no shortcuts. Guess what shortcuts gonna get you? Gonna keep you in the 99%, dead broke, working for somebody for the rest of your life. That's what shortcuts are gonna get you. Oh, where's the shortcut? I don't want to take the long route. I want to take the shortcut. Okay, keep looking for them shortcuts and see where that gets you. What you better do is take the long route. And ain't nothing wrong with the long route. Have a little patience, a little discipline, a little consistency. And you'll get to your bag. You'll get to your pot of gold at the end of the rainbow. You'll get to your freedom. But you're going to have to be patient. You're going to have to discipline yourself. And you're going to have to be consistent. And you got to stop making excuses. Yeah, we make a lot of excuses. We blame a lot of everybody else but ourselves for our financial plight that we're in. No, the financial condition you're in right now, you caused it. Good news is you can get yourself out of it if you pay attention and follow the blueprint. You can get yourself out of it. Now, down in that description box is a Moo link. Click on it. Get yourself up to 20 free stocks when you open up your new Moo brokerage account. That's the first step, guys, for a lot of y'all. For a lot of y'all, the first step is opening up your brokerage account. And I'm asking you to consider the brokerage account, primary brokerage app that I use, which is Moomoo. Now, the good folks at Moomoo are going to give you up to 20 free stocks when you do that. You put $100 in your new Moomoo brokerage account, they're going to give you 8 free stocks, publicly traded companies. If you don't know what a publicly traded company is, go to Google and research it. That's another thing. Ain't nobody here to give you a fish, but we're going to teach you how to fish. See, give you a fish, you feed yourself for one day. Teach you how to fish, you feed yourself for a lifetime. So ain't nobody here to give you no fish. So if you want to go figure out what something is, go research it yourself. Don't be in here in the chat, well, what that is? Can somebody explain that to me? Go research it yourself. That's how you learn. Again, shortcuts. Everybody want a shortcut. Oh, I don't want to research nothing. Just tell me. Like you're going to remember it anyways. You're not. Why? Because you haven't researched it and they haven't sink into the filter system. When somebody give you something like that without you doing anything, you don't appreciate it. You appreciate things that you got to go out and bust your butt to get. Then you appreciate it. Somebody give you something, you don't appreciate it. We don't appreciate it. That's how we are. So my ask is, if you want to get started today, not for you folks that are already pros and know what you're doing. I'm talking about new people. I don't care if you're 18 to 80. If you're trying to get started buying paper assets to potentially build your wealth someday, you got to have a world-class brokerage app. And in my opinion, Moomoo is a world-class brokerage app, in my opinion. I don't care if you disagree with me. I'm giving you my opinion. It's my YouTube channel, and I'm going to give you my opinion on here. I don't take in consideration nobody else's opinion. Anybody else with an opinion, go start their own YouTube channel. That's all you got to do. I don't get that. Go start your own YouTube channel and give your opinion. But on this YouTube channel, I'm giving the opinions. And in my opinion, it's the best self-directed brokerage app out there. So you folks that are brand spanking new and trying to learn how to do this thing, ain't nobody going to give you nothing. I'm going to keep it real with you. Ain't nobody going to give you nothing in this world. That's not how this world is built. Ain't nobody going to give you nothing. Anything you want in this world, you got to get yourself in a position to take it. Not aggressively or any crazy way I'm talking about by educating yourself and then executing. That's how you take it. Nobody gave me nothing when I was 26 years old. Everything I got from 26 to when I retired from banking, I went out and worked for it. Nobody gave me nothing. So that's all you got to do, guys. If you want to do that, go do it. And again, if you're listening to these soybean billionaires in the live chat, you ask yourself this question. If you were so wealthy and doing so well, what you doing in this chat? You don't see real people with real wealth, guys, in these chats right here acting like a clown. You just don't see it. What you see is pretenders. So please understand that. Do not take advice for someone in another man's chat. Don't take advice from them people. Come on, guys, really? Really? Take advice from somewhere else, but not from somebody in another man's chat. Come on, who does that? Nobody. So here's the deal. Get yourself down in the description box and click on that Moomoo link. Go try out Moomoo. Get yourself up to 20 free stocks. And then once you do that, send me an email through the website and let me know that you've opened your Moomoo account. And then I will go ahead and send you some tutorial videos that will help you collapse time frames and get to your pot of gold at the end of the rainbow, because it'll teach you how to use the app, right? Those two videos that I'm going to send you, they're tutorial videos. They will teach you how to use the Moomoo app. You can learn that over the weekend. And then boom, go ahead and make your transfer over the weekend, start the transfer, putting money into your brokerage account. So by next week, early next week, your money will be in there. Maybe by Wednesday, Tuesday or Wednesday, your money will be in there. And now you're ready to do what? Follow the blueprint. Follow the blueprint. What's the blueprint? Big boy blue chip. Traditional investing, buy and hold, big boy blue chip long term. That's the blueprint. You follow that blueprint, you give yourself a really good chance of multiplying money while you sleep. That's all you got to do, man, and be consistent with it. You know you got to put money in there every single month through DCA, buy big boy blue chip, and just wait and be patient and let them develop. Let them mature. right? Stop looking for the get rich quick. Stop looking for the shortcuts. Ain't no shortcuts, man. Why do you think 99% of the people control 1% of the wealth in this country? Ain't no shortcuts. 1% of the people in this country control 99% of the wealth. Why? Because they ain't looking for shortcuts. They learn a skill, they learn a technique, they add value to the marketplace, they make money and they multiply it. And they just do that over and over and over. We're the only ones looking for shortcuts. We're the only ones with a $30,000 skill set but think we should be making $100,000. You got a $30,000 skill set. How in the world are you going to make $100,000 when you add $30,000 worth of value to the marketplace? The marketplace ain't going to turn around and pay you $100,000. Why would the marketplace do that? If you want to make $100,000, $200,000, $300,000, $400,000, $500,000 a year, $1 million a year, add that to the marketplace and it will return that to you in payment. But you can't have $30,000 skill set and think you should be making $1 million. No, you got to get your skill set up. Right? Number one tool to build wealth is what? Income. Income is the number one tool to build wealth. Then you take the second, the number two is what you do with that income. Right? Number one tool is income. Number two tool to build wealth is what you do with the income. So it's not good enough to just make it, but then is what you do with it. And that's what we're talking about today. Big boy blue chip, right? Traditional investing, buy and hold through DCA, right? Big boy blue chip, and you hold them long term. Let them mature. They may mature in 2 years, 3 years, 5 years, 10 years, 20 years, who knows? It depends on what you pick. They mature at different times. But what history has told me, an S&P 500 ETF that tracks the S&P 500 index has a history over the last 90 years of delivering between 7 and 10%, average between 7 and 10%. Let's say you get 8% over the next 10 years in whatever you decide to invest. The more you invest, the bigger it grows. The less you invest, the smaller it grows. It takes longer. So somebody putting $1,000 in a month in an S&P 500 and getting an 8% rate of return over the next 10 years is going to have less than somebody putting in $10,000 a month in that same S&P over the same time period with the same projected interest rate or rate of return. It's the more you put in. That's why I tell you, your income, you take that income and then what do you do with it? You put it in something that'll multiply it while you sleep. That's where paper assets come in. That's what I've done over the last 30 years and have done it successfully because I got patience, I got consistency, I got discipline. You got to have those things or you're not going to build any wealth. You're fooling yourself. You're going to frustrate yourself. Get the right skill set, get the right mindset, and then get into the right investments, follow the blueprint, and then boom, give yourself a chance to build some wealth. So get down in that description box, click on that Moomoo link, open up your Moomoo account today, get yourself up to 20 free stocks, publicly traded companies, then send me an email through the website and let me know you've done that. And I'm gonna send you the tutorial videos. Like I said, for you brand new folks, 18 to 80 or older, 18 or older, let's say it that way. It's never too late, not in my opinion. See, I don't put no limitations on me. Stop putting limitations on yourself. Stop putting limitations on yourself. Stop. Here's the thing. Stop doing the same old thing every day and think you're going to get a different result. Stop doing the same old thing every day and think you're going to get a different result because you're not. If you want a different result in your life, guys, change the activities. Change your activities. Change your activities. Stop doing the same old stuff that's keeping you broke. If you want to be broke for the rest of your life, keep doing those same things you're doing. Check out your soybean billionaires. They're in here every day doing the same thing, and they ain't going to change nothing in their financial life. Nothing. Don't be like the soybean billionaires. Change something in your life by changing your activities. If you want to change in your life, change your activities. Start with what? getting your new brokerage app. Right down in the description box. Click on that Moomoo link. All right, guys, let's move on. Let's see what we're going to talk about today. Oh, I know what we're going to talk about. Y'all know what we're going to talk about. One of my favorite subjects, which is the Fed, Nvidia, and Serv Robotics. We're going to talk about why some information we got today could potentially send them higher, skyrocketing. Now, this is my opinion, guys. I'm not an expert here. I have no idea if they're going to skyrocket or not, but I'm giving you my opinion, right? I'm giving you my opinion based on my 30 years of doing this. And again, I'm going to keep doing it. Why? Because I enjoy doing it, and I know there are people that I'm helping. That's why I got 1,000 people under my Wealth Builders financial community from zero. Poof, nothing. Zero. Got 1,000 people over and adding. I'm going to have 2,000 before the end of the year. Why? Because I'm a truth teller. I just tell it straight. Right? I tell it straight. I'm not out here trying to flex on you with Lambos and all this stuff. Yeah, I'll show you if I get a new car. I'll throw that out there and let you guys know I got a new car. But I ain't in it every day showing it to you. Do I got a Lamborghini? Yes. Have I owned Ferraris? Yes. Right? I don't own a lot of stuff. But that don't matter what I owned. What matters is what you own. What matters is you at your freedom. Don't matter what my freedom is. What matters is, can I get to my freedom, Richard? That's what I care about. I don't care about your freedom. I don't care about your cars. What I care about is how can you help me get to your freedom? See, I know that's what people fundamentally want from me. They don't care about the cars. They don't care about my houses. They don't care about my trips. What they care about is share some information with me today that will help me get what I want. See, that's the key. Share with me today information that will help me collapse time frames and get to my thing or my freedom. And that's what we're going to do today. So today came out, we had the PCE report that came out today. Now, why is that important, Richard? Because that is a gauge that the Federal Reserve uses for inflation data. Matter of fact, that's the report they like above and beyond all other inflation reports. So we get the CPI, we get the PPI. Those are great reports for inflation, to gauge inflation, whether it's going up or down, but they prefer the PCE. So the PCE came out today. And it was good news. Further backstopping rate cuts September 18th, which could be a catalyst for the entire stock market, including Nvidia and Serv Robotics. Richard, why in the world do you throw Serv Robotics in there? Who knows? Nobody knows that company. I told y'all, anything the gold standard touches becomes the gold standard. But we're going to share a little bit about why Serv is down. We're going to talk about that. Why is Serv Robotics all of a sudden down to under $9 a share? Which, in my opinion, ain't a bad thing. If you know anything about this stock over the last month and a half, that's not a bad thing. That's an opportunity, in my opinion. But you got to make that determination. But we're going to talk about why Serv is under $9 a share right now. We're going to also talk about Nvidia, because y'all know that's the 900-pound silverback gorilla. I'm going to talk about that every day. If you don't like it, find you another YouTube channel. Bingo. Because I don't need no suggestions on what I need to talk about, because it's my YouTube channel. You want to make suggestions, start your own YouTube channel. Just being honest with you. I don't want you to waste your time doing that, because I'm not going to take any of those in consideration. This is not that kind of YouTube channel where you get to pick what I talk about. Oh, hey, guys. Love you to death, guys. Please tell me what you want me to talk about, guys. No, this ain't that kind of YouTube channel. No, this YouTube channel is a dictatorship. It's not a democracy. We don't get to choose what I talk about. No. I get to choose, and that's what I talk about. If you don't like it, bounce. Find you another YouTube channel. All right, so let's go. Here's the headline. Fed's favorite inflation indicator increased 0.2% in July as expected. Now, when they say expected, you know you got the experts out there, right? So the experts will say, hey guys, this is what we think inflation should go up. Now, if inflation actually goes up higher than that, that's a bad thing. If inflation goes below that, that's a good thing. If inflation comes in right at expectations, that's a good thing. Sort of kind of like when you see experts say to a company, listen, we think you should do XYZ revenues in Q2. And then the company comes in higher, that's a good thing because they beat expectations. If the company comes in lower, that's not a good thing because they didn't beat expectations. Or if the company comes in right what the experts wanted, they met expectations, right? So that's the same thing here. The experts do the same thing. They say, well, okay, inflation. This is what we think inflation should do in July 2024, year over year, right? And if it comes in above that, not a good thing. If it comes in right at the number, good thing. If it comes in lower than that, good thing, right? So that's what we're looking at here. So let's go ahead and dive into this report. Why is it so important? Because this is the report, guys, right here that the Federal Reserve uses above all other inflation reports to gauge whether they should increase interest rates, keep interest rates the same, or decrease interest rates. So it's a very, very, very important inflation tool that the Fed uses that could skyrocket stocks, the whole stock market. It could influence and skyrocket Nvidia. It could influence and skyrocket Serv Robotics. So it's a good report for us to spend a few minutes on and talk about. Inflation edged higher in July, according to a measure favored by the Federal Reserve as the central bank prepares to enact its first rate reduction in more than 4 years. So what they're telling you here is the Fed started increasing rates in March of 2022, and they haven't reduced them since. I mean, they've been jacking them up, right? Now, they stopped jacking them in July of 2023, and it's just been at the same rate since July, over a year, same rate. Now, at their September meeting, which is basically a couple of weeks from now, there's very, 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 very wide speculation that they're going to reduce rates. Matter of fact, the experts give it 100% chance. 100% chance that they're going to reduce rates. What we don't know is how large of a rate reduction will it be? Will it be 25 basis points? Will it be 50 basis points? This report helps the Fed understand, listen, what we've done over the last, 24, 30 months has worked. At the peak, which was June of 2022, at the peak, inflation was 9%. Headline inflation was 9%. Today, it's under 3%. So them jacking these rates definitely brought inflation down, which is a good thing. But here's what you risk. If you keep rates higher for too long, it could potentially throw the economy into a recession. So they don't want that. They want the best of both worlds. They call that a soft landing. They want the best of both worlds. They want to be able to bring inflation down, but still keep our economy healthy where it's growing, which they have done, right? So then last Friday, I believe it was last Friday, well, 2 Fridays ago, last Friday, Federal Reserve Chairman came out at Jackson Hole in an economic symposium, and he basically gave language that, yes, we're ready. We're ready to start reducing interest rates. Some people agree with that, some people don't. But the market believes at 100% that they will reduce. That could be a catalyst to send stocks higher. It could send the stock market higher, including Nvidia, including Serv Robotics. We'll have to wait and see. But that's how those 3 tie in together, right? So here we go. The Commerce Department reported Friday that the personal consumption expenditures price index. Short is PCE, right? Long is personal consumption expenditures price index rose 0.2% on the month and was up 2.5% from the same period a year ago. We also know the Fed want their target inflation rate at 2%. Right now, it's at 2.5%. And that's within range, right? That's within range. The target inflation rate is 2%. Right now, we're currently at 2.5%. So not that bad, not that far off, about 50 basis points. So not that far off. Exactly in line. So this 2.5% from a same period a year ago is in line with what the experts wanted. So that's a good thing. That's a good thing. The experts wanted year over year it to come in at 2.5. Guess what? It came in at 2.5. That's a thumbs up for us. That's a thumbs up that allows the Fed to feel comfortable with reducing interest rates, which do what for assets? Assets go up, guys. Interest rates come down, assets go up. Why does assets go up when interest rates come down? Because now money that people can borrow becomes cheaper to borrow. And a lot of people take that borrowed money and they invest it in assets, whether it's real estate for income, whether it's a business, whether it's the stock market, whether it's gold and silver, antiques, memorabilia, and collectibles, whatever. People can take borrowed money that they can borrow cheap. And what do I mean cheap? When I can borrow money for less than what I can then take that money and invest it to get a return, it makes sense to borrow money. I can go borrow money at 4% and turn around and get an 8% return on that money in my business, in the stock market, in real estate, in any other asset. That's what people do. Smart people do that. I did it for 30 years. So that's why when interest rates come down, assets go up, because why? Demand goes up. Demand for those assets go up when a new money supply is added to our economy. A new money supply is when borrowing becomes cheaper, less expensive. People go borrow money and they turn around and put that money in assets. That's why when interest rates go down, assets go up, because demand goes up for those assets. Keep a hold of that. That's the thing you got to think about, guys, is when interest rates go down, a new money supply is added to the economy, and that new money supply is borrowing money from banks, borrowing money from lenders, and then taking that borrowed money and going buying assets. That's why the demand for assets go up when interest rates go down. Just a little bit of FYI, guys. It's fundamental stuff, right? I can go borrow money from a bank at 4%. I can take that 4% and go put it in something that can yield me 10%. You ain't got to be a rocket scientist to figure out. You make money doing that, right? So pay attention and listen up. Pay attention and listen up. When rates go down, assets go up because of demand. All right, excluding volatile food and energy prices, core PCE. So you got two inflation gauges. One is with headline inflation, which is basically everything calculated, goods and services, how prices went up on those goods and services over a period of time. And then you got core, where they take out food and energy costs, because those two are pretty volatile. They take those two out and then they measure everything else. That's what they call core. When they add food and energy back in, they call that headline. So you got two of them, headline and you got core, right? We're talking about core because that's the one the Fed really cares about. So excluding volatile food and energy prices, core PCE also increased 0.2% for the month, but was up 2.6% from a year ago. The 12-month figure was slightly softer than the 2.7 estimate. We beat. So on the main inflation gauge that the Fed look at, which is core PCE, the experts said year over year, they were okay with inflation coming in at 2.7%, but in actuality, it came in at 2.6. So we beat. That's good news for the Fed. That's that soft landing. That's that soft landing, baby. See, I'm a truth teller on here, guys. I just give it to you straight. You do whatever you want to do with the information, but it's here. You ain't got to be a rocket scientist to figure this out. I'm not trained in any of this stuff, but it just takes common sense. If I can borrow money at 4% and then turn around and invest it at 10%, you ain't got to be you ain't got to buy no course to figure that out, guys. You ain't got to go spend $2,500 on some dude's course or some gal's course to tell you that. That's pretty easy. Borrow it at 4%, put it in me a piece of real estate, put it in the stock market, put it in a business, get me 10% return on that free money, pay off my 4%, I got 6% left. That's profit with no money out of my pocket. That's what you do to build wealth. That's what you do to create income. That's all you got to do, man. That little simple little thing right there will help you put more money in your pocket. You ain't got to buy no course for that. It's that simple. Borrow the money at 4%, put it in something that'll give you a 10% return. Net, you got put 6% in your pocket. Bingo. Pay your little taxes on it. Okay, maybe you pay taxes on it, you put 5 in your pocket. I don't care. It was free. It wasn't my money. It was the bank's money. Did it for years. Years. Go to the bank, borrow money, and buy assets. That's what I did for years. I did it with real estate for 25 years and made a bunch of money off somebody else's money. And then didn't know nothing. Started with no knowledge, but gained knowledge as I went along. That's what I'm telling y'all. All this giving you a fish crap ain't helping you. It's hurting you. That's what the 1% want to do. That's what the matrix want to do. That's what they want to do. They want to coddle you. They want to get you up here where you dependent on them to give you something. Oh, I can't do this because the 1% have been giving me the information. And I don't know how to go to Google. I don't know how to go to Google and type that in. Can somebody help me type this into Google? Really, guys? Is that really what we've come to? That they got to spoon feed you every little piece of information that you get? No, go out there and figure it out on your own. All right, here we go. Fed officials tend to focus more on core. I just told you that, right? Fed officials tend to focus more on core reading as a better gauge of long-run trends. Both core and headline inflation on a 12-month basis were the same as in June. Core prices, less housing, increased just 0.1% on the month. And other inflation components ease. Shelter has proven to be stubborn. Again, rising 0.4% in July. Now, when they're talking about shelter costs here, guys, they're really talking about rent. They're talking about rent. So rent has been increasing, not as fast, but it's still increasing slightly. But it's not as fast as a year ago. But it's still increasing. And that's been the Achilles heel of inflation, well, of the Fed. It's been the Achilles heel of the Fed because they can't get shelter costs to stop rising. But now we're making progress. We're making progress. So that's a good thing, right? We're making progress. Elsewhere in the report, the department's Bureau of Economic Analysis said personal income increased 0.3%, slightly higher than the 0.2 estimate. That's a good thing. Why? We need the soft landing. See, you don't need someone's personal income to be decreasing. Why? They ain't got no money to spend. And if they ain't got no money to spend, the economy suffers. So you don't want that number or that measurement to be lower than expected. Now, the good news is it was higher than expected. So that's good news. Personal income is higher than expected. That means people still making money, they can go spend it. Keep our economy strong. Remember that soft landing. We want to bring inflation down, but we want to also make sure economy stays up. That's a good measure. Personal income is up 0.3. Experts only wanted it to come in 0.2. We beat. That's good for the economy. Fed love that, right? Just trying to drop a little game on y'all so y'all understand what's going on here, guys. Pay attention. Pay attention. I'm just trying to give you some information that will help you become a better investor. So here we go. So we got personal income increase 0.3, better than the estimate of 0.2. Thumbs up, good news. While consumer spending rose 0.5 in line with the forecast. Right? Spending continued at a solid clip, even though the personal savings rate fell to 2.9, the lowest since June of 2022. So you're looking at what? Personal income, and you're looking at spending. Those are the things that you got to have, guys, unless this economy is going to run or it's going to crash. You got to have people buying stuff. 70% of our economy is made up of consumer spending. So these are good news numbers. Now, it's not good news that savings rate has went down, but it is good news that personal income is up and spending is up. Not very good news for savings, right? Savings rate fell to 2.9%. That's not good. What that's telling me is people are still slightly struggling when it comes to saving and investing. That's a bad thing for us. We want to be also saving and investing, along with increasing our income, along with spending what we only need to spend to keep our economy growing. What we don't want to do is be taking our income and our savings, buying things that we really don't need, and we never get to wealth. Yes, the economy stays strong, the 1% get wealth, but we don't, because we're buying stuff that we really don't need. We're buying stuff, don't put no money in our pocket, it takes money out of our pocket. Remember, you should be saving and investing in assets that make money while you sleep. So when you look at the PCE report, it was a good report. I mean, it wasn't mind-blowing, but it was very good. It continues to keep our hopes alive for what? Interest rate reductions in September, right? It does. So good report. We ain't gonna go in. We're not gonna go down the rabbit hole any deeper. You certainly can go out on the web and pull up the report yourself and go on down that rabbit hole. We don't went down the rabbit hole enough. I just wanted to get you to understand this soft landing that the Fed is about to pull off, and how this PCE report is very, very important report, especially going into September, when we got to make some tough decisions on interest rates, which those interest rates could be a catalyst. Decrease in interest rates, guys, could be a catalyst to send the market higher, including Serv, including Nvidia. That's my opinion, guys. Not a financial advisor, just trying to drop a little knowledge on you, right? Just trying to drop a little knowledge on you today. That report is important. If we can get in a position where we can borrow cheap money again and then take that money and put it in assets that will multiply our wealth while we sleep, bingo, that's what we want to be able to do. And I encourage anybody out there that's trying to build wealth to use every financial tool at your disposal to build wealth. And OPM is one of the main ones to use. Other people's money, mainly the banks. That's what they're in business to do. Now, in order to do that, you got to be in good financial shape. You can't be in raggedy financial shape, think you're going to go to a bank and get your $100 or $200 or $300, and you ain't got raggedy financial shape. They're not going to give it to you. So right now, guess what? Get yourself in financial condition. Again, don't pay no attention to these broke guys in the chat, man, because if they were rich, they wouldn't be here. Not paying attention to these broke people in the chat, guys. Broke, listen, People who have already built a lot of wealth and know how to build wealth, they wouldn't be in here, not doing what they do. See, that's a sign of people that ain't built no wealth, and they want to keep you from building wealth by distracting you. So all I'm telling you is don't pay attention to them. If you want to on your side, turn the chat off. I don't turn it off because it's good to get more views. It's good for engagement. So I'm gonna let them run. And I'll address them every now and then because it's fun. I get a good laugh out of it. Plus, it's good for engagement. But for you on the other end, you do know you can turn the chat off if you don't want to listen to it. Just turn it off and just listen to the message, right? That's all you got to do. I don't turn it off because it's good for the algorithm. I need the algorithm. I need engagement to get this video out to more people, which I've done. So since I turned the chat back on, my views are way up. Turn the chat off, the views go down. I turn the chat back on because I get more engagement. I get more views. Therefore, more people can be helped. So I'm okay with it, and I'll address them when I want to address them because it's my YouTube channel and it's fun. It keeps me on my toes. So let's move on. What is our next topic we want to talk about? Let's talk about Serv. And then we're going to end the conversation on the 900-pound silverback gorilla, Nvidia. Here's the headline. Here's the headline now, because remember I told y'all, I'm going to walk you through, or at least the experts will walk you through why Serv is down. This is what the experts are saying. And then I'm going to give you my little 2 cents. But here's what the experts are saying why Serv is down. Here's the headline. Serv Robotics down 37% in a month. Is Serv stock a buy on the dip? That's a pretty fair question. Let's answer it from the expert's perspective, and then I'll give you my little 2 cents. My little uneducated, unqualified 2 cents. So here we go. Serv Robotics, ticker symbol Serv, shares have declined 37% in the past month, underperforming the Zacks computer and technology sector's gain of 4.5% and the Zacks IT services industry's return of 3.2%. Shares of this AI-powered last-mile robot delivery service provider saw significant volatility since its public equity offering on April 18th from when it started trading on the NASDAQ capital market under the ticker Serv. Since then, Serv shares have jumped 197.8%. However, the sluggish second quarter 2024 results saw shares dropping 9.8% since August 13th. Serv reported revenues of $0.47 million, significantly better than the $0.06 million reported in the year-ago quarter, but plunging 50.5% sequentially. The massive quarter-over-quarter drop panicked investors, despite an 80% jump in second quarter delivery and branding revenues. Daily supply hours surged 28% sequentially. So let's keep moving. The question is, the recent dip in Serv shares brings this question into investors' minds. Is this the right time to jump into the stock? And now the expert says, let's dig into it. Now, I gotta let you guys know, I'm in the stock right now. I got about 8,500 shares of the stock right now, just as a full disclosure. I'm in the stock, I got 8,500 shares. So just so that you know, I got skin in the game. I'm not out here just flow boating. Some of y'all old cats know what flow boating means. I'm not out here just flow boating. Some of you old cats will know what flow boating means. So I'm in this thing. I got skin in the game. So I'm right here with you trying to figure out, okay, what's my next move? Do I stick around, or do I pull the parachute cord and plunge out of this thing and lick my wounds and move on to the next one? Sometimes you get an L, guys. I don't know why people get in the stock market or get into real estate or start a business and think, oh, I should just win every time. No, you get some L's every now and then. You just want to get more wins than you get losses. You want to get more W's than you want to get losses. I'm listening to Coach Prime on his little interview after their game. You know, they beat a team last night. They beat them, I don't know, beat them by 4 or 5 points. And in the interview, the guy was saying, are you happy? Looks like you only won by a little bit. Are y'all pleased with that? What could you done better? Coach Prime said, you know, last time I checked, a W is better than an L. At the end of the day, nobody remembers the score. They just remember the W or the L. So my point here is, as long as I get more W's than I get L's, I'm okay with the stock market. I don't have some preconceived idea in my mind that I'm never going to lose a dime in the stock market. I may lose on Serv. Okay, so what? I go get the next one. Who cares? I don't. Of course I want to win, but it's not going to, oh golly, I'm going to liquidate everything and never divest in the stock market again. I lost on this one. No, man. You win some, you lose some. The goal is just win more than you lose. Now, I'm not saying I'm going to lose on Serv. I done been in Serv in the good days, and now I'm in Serv in the bad days. But I ain't panicking. So that's the reason I wanted to talk to you guys about some of what the experts are saying so that you get both sides of the table. So you can make a decision what you want to do, right? So let's keep moving. Just wanted to FYI, I'm in this thing. 8,500 shares in this thing. Let's keep moving. Serv Robotics rides on strong last mile delivery prospects. Let's read about it. Serv's long-term prospects ride on growing demand for last mile delivery of food and other items on partner platforms that include Uber Eats, 7-Eleven. The company, which was spun off from Uber Technologies in 2021, counts Nvidia, Uber, 7 Ventures, and Delivery Heroes corporate venture units as the strategic investors. So again, when the gold standard touches somebody, gold standard, AKA Nvidia, touches a company to the tune that they've touched Serv Robotics, in my little estimation, Serv Robotics becomes the gold standard as well. That's my little take on it. You may think differently. Let's keep moving. Serv's strong liquidity position is expected to help it execute its long-term strategic plan that includes the deployment of 2,000 robots across the United States in 2025. So that's the directive. Serv wants to get up to 2,000 robots, little robots that deliver in the last mile of the delivery across the United States. That's the goal for 2025. It has already completed the design phase for the 3rd generation robot. Serv Robotics generated $35.8 million in gross proceeds from the successful public equity offering and $15 million from a private placement. As of June 30, 2024, Serv had cash and cash equivalents of $28.8 million. Most recently, it raised another $20 million. So they're taking on cash, right? Some of it through debt, some of it through equity, right? They're taking on cash because they're going to need that cash in order to hit these milestones, 25, 26, to become what they believe they can become. This is not unusual, guys, for companies that are just starting out, that are trying to disrupt an industry. They're trying to introduce a new way of delivering packages and food and whatever to customers using robots. Okay, so that you know that, let's keep moving. Serv Robotics believes robots have the potential to reduce the average daily cost under $1, lower than the delivery cost by human carriers currently, making on-demand delivery more affordable and accessible in the areas in which it operates. So here's the game plan. Here's the game plan. Hey, Richard Fain Company, you got human beings out here making your deliveries and it's costing you this. We're going to give you some robots that'll make those deliveries and it's going to cost you this. This is how much you save, Richard Fain. Are you interested? It's that simple, guys. It's that simple. Now, do you completely replace human beings making deliveries? No. But when you talk about your top 25 busiest cities in America, where, you know, getting around those cities are hectic, and you can put a little robot to deliver something a mile away, or you can, half a mile away, as opposed to having somebody get on a bicycle or walk it or whatever they do, and your cost increase. Hey, man, this is a concept a lot of these companies in these fast growing cities, in these top 25, top 50 cities, they may look at. You do know Shake Shack has already signed a deal with these guys for that purpose. Shake Shack. Now, what happens if other companies come on board, which I believe they will? Let's keep reading. Per the ARC investment report, and if y'all don't know who that is, that's Kathy Wood. That's her investment company. Per ARC investment report, the potential market for food and parcel delivery by robots and drones is expected to hit $450 billion globally in 2030. Nice size market for these little robots, ain't it? And these little drones. Nice little robot, nice little drone, nice little market. $430 billion over the next 5 years. Just saying, guys. I'm just trying to walk you through why this thing might make sense. Obviously, the 900-pound gorilla believes it makes sense. Why? Because they bought 3.7 million shares of it. Yeah, Nvidia bought 3.7 million shares. They own 10% of the outstanding shares of the company. It's about 37 million outstanding shares. But guess what? Nvidia owns 10% of it. That's a nice little hefty stake. Now, why would Nvidia do that? That's what you got to ask yourself, right? That's what a guy like me is asking myself. Well, golly, if the gold standard believes in it, hell, I might need to grab me some of it if the gold standard believes in it. See, I don't get into all this other stuff that a lot of y'all try to go down the rabbit holes and get into. I don't listen to any of that. All I listen to is just like Warren Buffett with Sirius XM. Why in the world would Warren Buffett spend $300 and something million, whatever he spent? It was a bunch of money, more money than I got. Why would Warren Buffett do that? And a company that's valued, shares are about $3 a share right now. You do know they got a special little merger coming on September 10th. What Buffett know, I don't know. Why would Buffett put that kind of money in this company if it's going to zero? He wouldn't. Why wouldn't Nvidia put so much money into a company that's going to zero? They wouldn't. They got plans. And I want to be a part of those plans. So am I selling my 8,500 shares? No. Could I take an L on it? Yeah. But that's okay. I live to fight another day. I'll find me another one. See, I'm built for this. If you ain't built for this, parachute out. I'm built for this. I understand I'm going to have some L's. My job is to have more W's than L's. Just like Coach Prime said. Coach Prime said, I don't care about the score. All I care about is I got more W's than I got L's at the end of the year. I love that. I just want to have more W's than I have L's at the end of the year when it comes to my investments, and I'm Gucci. All right? You can try to be perfect if you want to. I ain't looking for perfection. I'm looking for more W's than I have L's. That's all I'm looking for. So here we go. Serv's expanding robotics offering is expected to improve its competitive position in the last mile delivery space currently dominated by the likes of DoorDash and Amazon. Yes, Sirski. But what happens if Amazon or DoorDash says, you know something, if you can't beat us, join us? What in the world? Guys, can you imagine if Amazon comes to this little company and say, hey, you can't beat us. We don't want to develop no robot technology. Come join us. Come join us. License your technology to us. What if they do that? Why don't you license your technology to us? What if DoorDash comes to them and says, license your technology to us? You know, there's already a company that has done that. It's an auto supply company called Mega something. But they got a license agreement with these Serv Robotics guys. Already told you about Shake Shack. You already know the 900-pound gorilla in there. And again, guys, this is not an effort to get you to go do anything. You can do what you've been doing, right? I keep telling you, keep doing what you're doing. You're going to get the same results you've been getting. So keep doing what you're doing. This is not here to try to convince you to go do nothing. I'm just telling you why I'm buying it and why I'm in it. I got 8,500 shares. I don't know if I'm going to get a W or an L at this point in this thing, but I don't lose no sleep. I don't lose no sleep because I know if I get I get an L, Nvidia gets an L. And I'm pretty sure they didn't buy 3.7 million shares of this thing to get an L. I'm pretty sure Warren Buffett didn't buy all of them millions and millions and millions and millions and millions and millions and millions of dollars worth of Series XM holdings to get an L. I'm pretty sure he did. Warren Buffett's a pretty smart guy. CEO of Nvidia is a pretty smart guy. Both of them are over $100 billion in net worth. Both of them. These are smart guys. They didn't buy into these companies for nothing. Get in where you fit in. All right. Again, man, get down to that description box, click on that Moomoo link, open up that Moomoo account today, and get you up to 20 free stocks. When you put $100 in, you get 8 free stocks. You put $1,000 in, you get 20 free stocks. Limited time, guys. This particular offer will expire on August 31st, 2024. Just an FYI. So for some of you folks on the fence, you're trying to figure out what you want to do, you better figure it out by tomorrow because this particular offer is poof, like it never was here tomorrow. So get in where you fit in, get down in the description box and click on that Moomoo link and don't delay, act today. If you want these 20 free stocks, you put $1,000 in your new brokerage account, you're going to get 20 free stocks, but you got to activate and act today. Can't delay. All right, let's keep moving. Let's go on to the 900-pound gorilla. And then we're gonna end this thing for Friday. Been a long week. Okay, 900-pound gorilla right now, 117.70. So nothing to report there. Serv is down to 864. And I've already went on record and saying if it gets under $8 a share, then I'm gonna buy me some more of it. So when I get off of this thing today, I'm gonna put me a limit order in, get under $8 a share. I'm gonna buy me another 8,500 shares. So then I'm gonna have what? 17,000 shares of it. Will I win? I don't know. Maybe, maybe not. I don't know. But big reward, big risk. I'm not telling y'all to do that. I'm just telling you what I'm doing. I'm just telling you what I'm doing. See, I ain't got no fear in my heart. When I'm chasing it, I'm chasing it. Either I'm gonna chase it or I'm not gonna chase it. That's on me. I'm not telling y'all what to do. I'm just telling you what I'm gonna do. So if it get under $8 a share, like I've already said, I'm gonna buy me another 8,500 shares. So all right, here we go. Let's get on this 900-pound gorilla, and then we're gonna move on. So I'm looking around, trying to figure out. Okay, the stock price right now is under $120 a share. How low can this thing go? I'm trying to get another 8,800 shares, but the only way I can get that is if this thing goes down to $100 a share, which it might. If it does, boom. If it goes under $100 a share, boom. I'm gonna get me another 8,800 shares so I can have 20,000 shares of this company. I already got 11,200. So I'm probing around looking for little stuff and ran across an article that was done on the 28th. So it's a little dated, but I thought golly, this is interesting what they're saying about this stock, even though the article was before the earnings report, right? So it's a little, they got some stuff in here that was pre-earnings report is what I'm saying. But I thought it was still a good article for me to read to try to figure out, what's the direction here. Now, of course, I'm long-term in this thing, right? So that's my direction. But here's the article. And again, now remember, it's pre-earnings report, pre the stock dropping. So here we go. How Nvidia stock could jump 2.5 times to reach $300. Clearly, it didn't jump on earnings. We know why. They had no intentions of letting it jump on earnings. Even if the earnings would have came in 500% of everything, they weren't going to let it jump. That's the 1%. You knew that. We know that now. They tricked us. They got us. We got excited. Earnings came in just like we thought they would. Very good. But what we didn't realize was the 1% wasn't having it. They got me. They got a lot of us. That's okay. We move on. Like I said, sometimes we get L's. We move on. I got an L that day. I thought it would bounce and go to the moon. The rocket ship took off. Fuel, we didn't have enough fuel. Couldn't get out of the Earth's atmosphere. So we had to turn around. We had mechanical problems. So we had to turn the rocket ship around and land it. That's life. Very optimistic, very excited. Thought we had this thing ready to go. Thing took off. Couldn't get out of the Earth's atmosphere. Had to turn around. Land the thing. We'll try it again at some point in the future. But for now, let's talk about what potentially could be. I don't know, maybe. Here's what the article says. Could Nvidia stock reach $300 in the next few years? Now, is that doable? Now, I know a lot of you guys have gotten real pessimistic on Nvidia since it didn't go to the moon on the 28th of August. A lot of y'all have gotten pessimistic. A lot of y'all have bailed out on this thing. And I ain't mad at you. I ain't mad at you. I know a lot of retail investors, we're really easily manipulated. So it's no surprise to me that people are bailing out on this thing because we're easily manipulated. That's why we control 1% of the wealth. Because of that, being easily manipulated. So it's no surprise to me that people have turned their back and bailed on this thing, and that's okay. Hey, it's your financial freedom. Do what you feel like is best for you and your family. But I'm of the belief that this thing does have the ability to go higher. And I'm going to stay in it. Like I said, I don't care if the stock continues to retreat. If it retreats down to 100 or under 100, I'm going to buy 8,800 shares. So I can have 20,000 like Nancy Pelosi. Last time I checked, Nancy ain't sold hers yet. So I still believe there's something bigger at play. Yes, Wall Street traders are in control of the stock right now. Let's just be honest. Wall Street traders are in control of this stock right now. But that won't be forever, guys. At some point, institutional investors will come back in with lots of money when this thing settles itself down. Institutional investors will come back in, and then Wall Street traders ain't gonna have any choice but to leave this thing alone. Right now, they control it because institutional investors are not in the stock right now. Heavyweights are not in the stock, so you got Wall Street traders who control it. They control large blocks of this stock. They can run it up, they can run it down at their leisure. So know that. But that will not last forever. At some point, institutional investors will come in. ETFs will come in and buy more of this stock at some point. It's just not right now. So right now, a guy like me has to understand and live with Wall Street traders control the stock. Right? Wall Street traders control the stock. And all I can do is continue to be patient, position myself so that when institutional investors come back in, when And if hedge funds come back in and flush out Wall Street traders, then at that point we'll see the stock move again. Again, guys, there is no business performance issues with this stock. So for me, I don't bail on this stock until I see business performance issues, which I don't see right now. The last earnings report was exactly what everybody thought would come out. And that was part of the reason that the stock didn't move. And Wall Street traders control it, because it wasn't an aha. No one was surprised when they did what they did. Guess what people said? Oh, we knew they were going to do that. They've always done that. We knew they were going to do that. But for us right now, it's not a buy because we don't believe we can make enough money yet. It's too volatile for us. The Wall Street traders control it right now. And until we can have more solid footing and we can believe more into the overall artificial intelligence ecosystem, we're not going to make large investments into this company until we believe artificial intelligence is here to stay and it can make money. We don't want Nvidia being the only company making money in this AI ecosystem. We need the hyperscalers to make money. We need the mega caps to make money. We need the hundreds and hundreds of small companies to make money instead of just CapEx in this thing and not getting a return yet. So all of that comes into play, guys. That's why I tell you, if you're going to be in this thing, for me, I got to be long, because it's going to take a minute for all that to happen. And until that happens, Wall Street traders will control the stock. Now, that doesn't bother Nvidia. They're going to keep on doing what they do. But what it means is the rest of this ecosystem, really, it's like the hyperscalers have to come out in quarterly reports and say, yeah, we put $50 billion in building out our AI infrastructure, but we got $100 billion return on it. When that gets said, this thing going to the moon. But until that gets said, and I'm getting educated and learning more myself, guys, I'm getting more educated and learning more about what's really going on here, because this is a unique situation. It's a unique situation. Normally, when companies do, let's take another industry. Normally, when companies do what this did in another industry, they soar. But the reason this company is not soaring is because the large players, guys, that make up 75% of the stock market, we only make up 25. They don't care what we think. They make up 75% of the stock market. They don't believe the entire artificial intelligence industry is ready to make money yet. It's not good enough that just Nvidia makes money and the semiconductors make money. And really the only semiconductor really making big money is Nvidia. The rest of the semiconductors ain't making that much money. Yeah, the stock price is going up, but it's going up because of what? Potential. It's going up because of potential. Right? So when you think about this thing, you say to yourself, okay, what do I want to do here? Am I going to stay in this thing and wait until everything can be proved? Or am I pull the cord and get out of this thing? I'd have made me a little money, I'm out. I'll be back when they prove everything. That's one train of thought. You can do that. I can do that. But again, I'm not giving you financial advice, and I'm not trying to tell you what to do. I'm just thinking through this as just a regular person that has 11,200 shares of this stock and who's gearing up to buy another 8,800 shares so I can end up with 20. I've always told you guys, I'm in this thing for 10 years, and I think in the next 3 to 5 years, all of that will come to pass. I think maximum 10 years, the market will see that the artificial intelligence industry is an industry that's going to continue to grow and stay. And that's what we're facing right now. Nvidia is a wonderful company, amazing company, but they can't just be the only company making money. I mean, the people they're selling these chips to got to make money off of the chips. That's just the way it is, guys. That's just Wall Street. And as long as Wall Street, institutional Wall Street, don't believe that, they're not going to put big investment that they can grow over time. So therefore, guess who controls the stock until institutional Wall Street comes in? The traders. The Wall Street traders control the stock now. They control the up and down. They just do. And they ain't mad at that. I think eventually the Wall Street institutional investors will come in. But until they do, am I making money on the stock right now? Yes. My average cost for the stock right now is around $105 a share. It's trading at 118, something like that. So I'm making money. I could parachute out today. I could have parachuted out 2 weeks ago. I could have parachuted out 2 weeks ago. Chose not to. I could have parachuted at $130 a share and made a couple, $200,000-$300,000 and went on by my business. But I believe in the long term of this thing, man. And I'm going to stay in. I'm going to stay in and I'm going to buy more at the right price. And I understand now that Wall Street traders are controlling the stock. I was a little naive thinking, okay, earnings would disrupt all of that. No. And I had saw it because I saw what happened to Google. I saw what happened to Microsoft. I saw what happened to Amazon. So that was a precursor. I just didn't connect the dots. See, I saw what happened to those three companies when they came out with earnings 3 weeks ago. That was a precursor to what they were going to do to Nvidia. And guess what they did? They did it. So you can do whatever you want to do. You can go buy real estate. You can keep your money in cash. You can do whatever you want to do. Who cares? I really don't care what you do. What I care about is those that want to build wealth and understand that it's a longer term process, then do that. You trying to pick and choose, oh, I'm going to time the market. Guys, that ain't going to work. It's not going to work for us because you'll never outsmart these traders, man. These Wall Street traders, you ain't going to outsmart them. See, some of y'all think y'all can, but you won't. You won't outsmart these guys. So the only way you win, in my opinion, against that is you got to buy good companies and stay in them long term. That's how you win. And buy the dip when appropriate and keep building up shares. So when this thing does finally turn, your shares are significant. You bought them at a good price and now they start going up in value. That's what my game plan is. I'm not going to keep all my money in cash. For what? What am I going to keep all my money in cash for? For what? And do what? Oh, I'm a trader. I'm very good. I made $3,000 last month. Okay, good for you. Forget that. I'm going to do what I've been doing for 30 years and build a 7-figure net worth doing exactly what I'm doing now. And I'm going to keep doing it. I'm going to build an 8-figure net worth over these next 10 years. So you do what you feel like you need to do. That's up to you. I ain't got nothing to do with that. I don't got nothing to do with nobody else do with their money. All I care about is what I do with my money. And what I do with my money is I'm walking you through what I believe. So let's move on here. Could Nvidia stock reach 300 in the next few years? Does this sound ridiculous? Consider this. Less than 9 months ago, at the end of December 2023, Nvidia stock was trading at around $50 levels. This year, the stock has grown over 2.5 times and trades at close to 128. Remember, this was pre the earnings report coming out. Nvidia stock trades at about 75 times trailing earnings. Is this pricey? The expert says not at all, right? Especially if you consider the fact that the company's earnings could be about 4 times the current level in the next few years. We already know, guys, that the revenues will continue to increase. And the reason they're going to continue to increase is because the hyperscalers have already went on record and said they're going to keep spending this money. They're going to keep spending. They're going to keep the CapEx going to build out their AI infrastructures. You also know there are sovereign countries out there that are building out their AI infrastructure. So there are plenty of clients out there who believe in artificial intelligence. Even though Wall Street may not believe in it, there are people and companies and countries that believe in this stuff. It is. So yeah, Wall Street may not believe in it right now, but there are people out there that believe in it, and they're spending money. How is that? If Nvidia grows its sales at an average annual rate over 60% for the next 3 years, its revenues could move from around 61 billion in fiscal year 24 to around 250 billion by fiscal year 27. Let's see if they're on track. What have they done in fiscal 25 right now? How much have they done in revenue in fiscal 25 right now? They did 26 billion in Q1. They did 30 billion in Q2. How much is that? How much is that? That's about, what is that, about 50, what's that, about 56 billion? So that's 56 billion, guys, 2 quarters. What did they do in fiscal year 24? 61 billion. They did 61 billion all of 24. All of 24, they did 61 billion. They're already at about 56 billion right now through 2 quarters. Now, if you add what their Q3 forecast is, let's add that in. So we did 26 billion in Q1 25. We did 30 billion in Q2 25. They're on, well, matter of fact, let me go back. We did 26 billion Q1. We did 30.5 billion Q2. They're saying they're going to do 32.5 billion Q3. Through 3 quarters of fiscal year 25, they'll have 89 billion. Let's just say, because they've already said this, they finish off 25 with 34.5 billion. So that means they will end up fiscal 25 with about 124 billion in revenue. That means they will have doubled, more than doubled the revenue from fiscal 24 to fiscal 25. So I'm here to tell you guys, this is not ridiculous what these people are saying about the 250 by fiscal end 27. It's not out of range. Given the fact that the hyperscalers alone are gonna spend about 300 billion a year on AI infrastructure build out, data centers, cloud service providers. They're gonna spend about 300 billion a year. Now, Nvidia won't get all of that, but they're gonna get a good share of it is what I'm saying. So it's not out of the realm of possibility that this company could be around 250 billion in revenue by fiscal 27. That's not an impossible, guys. If Nvidia grows its sales at an average annual rate of over 60% for the next 3 years, its revenues could move from 61 billion in fiscal year 24 to around 250 billion by fiscal year 27, or over 4 times. For context, Nvidia's revenues grew by close to 3x over last 12 months, while notching an average annual growth rate of about 55% over the last 3 years. These growth rates could hold up given the surge of demand for Nvidia's high-end graphics chips, which have emerged as the de facto silicon for running artificial intelligence applications. The lure of AI is growing each day, and the demand for chips isn't fading yet. Why? Why isn't it fading? Well, initial AI models unveiled by the likes of OpenAI were largely text-based. Models are increasingly, while initial AI models unveiled by the likes of OpenAI were largely text-based. Models are increasingly multimodal, working with speech, images, video, 3D calling for higher computing power and larger number of GPU shipments. Moreover, sectors as diverse as energy to real estate, healthcare, and medical equipment and industrial robots are looking to leverage artificial intelligence tech as an input that can help these companies win. As more sectors adapt this AI technology, guys, the more it will become the normal. And that's what's going to be happening, in my opinion, over these next 3, 5, 7, 10 years. More industries will incorporate this artificial intelligence into their businesses to grow them, to make them more efficient, to be to retrieve data faster, to output data faster, to input data faster. I'm just telling you, that's my opinion. Here we go. Nvidia has already done it in the past. To put things in perspective, Nvidia stock swelled 900% from levels of $13 in early January 2021 to around $130 now, versus an increase of about 50% for the S&P 500 over this roughly 4-year period. It was a bumpy ride, with returns for the stock being 125% in 2021, minus 50% in 2022, and 239% in 2023. The underperformance in Nvidia's stock versus the S&P 500 in 2022 stands out in particular, as the benchmark index had returns of minus 19% that year. Notably, the high-quality portfolio with a collection of 30 stocks has outperformed the S&P each year over the same period. Why is that? As a group, HQ portfolio stocks provided better returns with less risk versus the benchmark index, less of a roller coaster ride as evident in HQ portfolio performance metrics. So all I'm telling you guys, I'm not going to go down the rabbit hole. I think I'm going to be done with that rabbit hole. It's a lot more to that rabbit hole, but I'm not going to go down any deeper. I've run out of my time. I normally want to get you guys out of here by 12 o'clock. I'm getting ready to get myself out of here by 12 o'clock. But let me just wrap this thing up in a nice little bow, a nice little beautiful red bow with sprinkles on it. At the end of the day, you do whatever you got to do for your financial freedom. Buy whatever you want to buy. You don't have to listen to me. But for me and my family, I'm going to stay in this stock until there's performance issues, business performance issues. If it's just market manipulation and market behavior, that's not going to bother me. If Wall Street traders want to run this thing back down to $90 a share like they did on August 5th, great, perfect. Go ahead, baby, because I'm in this thing long term. It's not going to faze me. I'm not going to get rattled. I'm just going to buy the dip, period. I don't care what nobody says. I ain't asking for no advice. I'm not asking for your feedback. I don't care what your feedback is. I don't care what your advice is. I'm going to do what's best for me. And I would strongly suggest each and every one of you do the same thing. Stop letting people influence you and do your own thinking. Just do your own thinking. If you don't like this stock, if you think it's not the right thing for you, don't get in. Go find something else to build your wealth with. But let's not be mistaken here. You're going to have to find something else to build your wealth. This whole notion of I'm going to keep my entire $5,000 in cash. Go right ahead. You do know inflation right now is currently 2.5%, right? You do know what that means for your cash you're keeping on the sideline. Oh, golly, I'm in a money market. That ain't going to last. For most of us, a money market at 2 or 3, 4% is not going to build no wealth for you. Now, if you're a millionaire or a billionaire, yeah, it will. But if you're just a regular old schmegular with $10,000 or $15,000 in your money market account, that ain't going to build no wealth for you. 20,000, 50,000, 100,000 in your money market? No. That little 3% ain't going to take care of you. You got $100,000 in your money market. Guess how much you're earning right now? $3,000 or $4,000 a year? Divide that by 12. Can you live off $300 or $400 a month? That's what I'm trying to tell y'all, man. Listen, you better figure out some way to multiply your money over the next 10 years. The money market ain't going to do it for you. I can tell you that right now, for 99% of us. Because 99% of us don't have $100,000 in our money market. Now, I know some of y'all on here in the community chat want to play like you do, but the truth is the statistics say we don't. The statistics say 150 million Americans don't even have no retirement savings. Zero. That's not Richard Fain. Go out there and look at the statistics. The statistics also say about 66 to 70% of Americans live paycheck to paycheck. That's what the statistics say. So everybody in here trying to act like they billionaires, they're not. Number one, ain't no billionaire would be in here. Ain't nobody who has built wealth. They wouldn't be in my chat. They would have their own chat. If you in here, that means you trying to figure out something or you just in here trolling. All I'm telling you guys is you better figure out something. You better stand for something or you'll fall for everything. You better stand for something or you're going to fall for everything and anything. And that's the truth. What do you stand for? What do you stand for? What do you stand for in your life? I don't know. I know what I stand for. I stand for God, Jesus Christ, my family, helping others, and get into the bag, and get into this wealth. In that order. Those are the 4 things I stand for. I don't stand for nothing else. I stand for God and Jesus Christ, my family, helping others, and getting to this pot of gold at the end of the rainbow. Those are the only 4 things I stand for. I don't know what you stand for. See, I don't worry about all this other stuff. All this stuff over, all this noise, all this white noise over here. I don't worry about that, man. I'm laser focused on what I need to do. Laser focused. I would recommend you get laser focused. Get yourself laser focused, man. Learn how to fish. Stop looking for somebody to give you a fish. All right? All right, man. I'm gonna get on out of here. Let's do one more. Let's do one more quick little. Serv down to 835. So it's trying to get down to my buy price. I'm gonna continue to watch this thing. 835 currently. Serv temperature check. One more temperature check on Nvidia. 118.21. That could be dip territory, dip season for somebody. I don't know. Y'all got to figure that out, right? So there's your temperature check on Serv. There's your temperature check on Nvidia. Have a great Friday, man. Do me a big favor, though. Get down in the description box and check out them links. Check out that Moomoo link. They're going to give you up to 20 free stocks for just trying out the Moomoo brokerage account. You put $100 in your new Moomoo brokerage account, guys, you're going to get 8 free stocks, publicly traded. You get $1,000 in your new brokerage account. They're going to give you 20 free stocks, publicly traded stocks, right? So get down in the description box and click on that first link, which is the Moomoo link. And then do me a big favor. Once you sign up for Moomoo, make your transfer. or in the process of making your transfer, send me an email if you want to learn how to use the Brokerage app. I got 2 tutorial videos that the Moo folks did for you that I can send you. Now, you can go on their app and hunt them down yourself, but it might take you a minute. I'm going to send them directly to your ASAP Rocky. You're going to get them ASAP Rocky if you send me the email through my website, www.richardfain.net. Second link down in the description box. Send me an email, and I'm going to get them out to you ASAP Rocky. Plus, if you want to, I can send you my wealth transfer blueprint 1.0, 2.0 that's outlining all the big boy blue chips I'm buying. Now, I don't got Serv Pro in there. It don't got Rocket Lab. It don't got Sirius XM Holdings. It don't got, what's my other one? I got a lot of them. It don't got my little shorts in there, but it got all my big boy loans in there. So, yeah, I'll send you them too if you want to. You copy my plan, or you create your own plan. I'm not a financial advisor. I don't play one on YouTube. I'm not one in real life. I'm not trying to give you financial advice. This is for informational purposes only. This is for entertainment purposes only. It's an opinion channel, not a convince you channel. So please make sure you understand that. Don't send me no emails saying, hey, Richard, can you explain to me? No. What I'm telling you is get over to the private mentorship club and join the fastest growing financial community on Patreon. And then we got a community chat over there. We can have that discussion. It's very healthy and vibrant community chat. I got 1,000 wealth builders over there every day giving their opinion. So if you want some opinions, don't just take mine, take it from 1,000 wealth builders. They'd be more than happy to give you their opinion. None of us are experts. None of us are going to tell you what to do, but we will offer up our opinion. So if you want to do that, get over to the wealth builders through the website, second link. Click on that Richard Fain Millionaire Mentor website link, www.richardfain.net, and get yourself around 1,000 people, fastest growing financial community on Patreon, and they'll be more than happy to help you. They'll be more than happy to share their experiences with you with Nvidia, with Serv Robotics, with any other ETF or any other big boy blue chip stock. We got people over there. We got 1,000 of them over there. They're invested in all kind of stuff. They'd be more than happy to share your opinion. Don't send it to me saying, hey, what should I do? I don't do that. If you're going to send me something, you got to send it to me over in the private mentorship club through a DM. Other than that, I'm not answering any questions about anything through regular email or through any other venue other than the private mentorship club through a DM. It's the only thing I'm answering. That's the only place I do mentoring. So if you want to put me in your gang of 5, you're going to have to join the private mentorship club. But you can. We got room for you. We're waiting on you. Get down to the description box. Click on that website link, www.richardfain.net, and come join us. Last thing, do me a big favor, guys, for y'all that want to rock with me and keep up with me when I'm not on YouTube, get down in the description box and click on that Richard Fain Millionaire Mentor Instagram link. And give me a follow on Instagram, and then send me a DM to let me know you're rocking with me so I can say thank you. I appreciate anybody that is willing to give me a follow. I appreciate it. Because we do some nice little things over there with some of my traveling and all the other little stuff that I'm going to be doing. I don't put it on the YouTube channel. I normally put it on Instagram. So if you want to keep up with me, do it there. And again, though, in those DMs, guys, I'm not trying to be a mentor. I'm just saying thank you and letting you see a part of my life that you won't see on YouTube. If you want mentorship, you need to go to the private mentorship community. That's the only place I'm doing mentoring. And I got out of that 1,000 people, I probably got about 100 of them that send me DMs every day that I communicate with them on a daily basis. But that's the only way I'm doing it. So if you want me to be in your gang of 5 and you want to be able to ask me questions on a daily, hey man, make an investment in yourself and come on over to the private mentorship club through the website. That's where you do it. See, in the world I live in, guys, it's a win-win. I don't live in a world where I give everything and I get nothing. I don't live in that world. I don't know what world you live in, but that's not how it works. In the world I live in is when you add value, you expect something back. You expect value. That's how the 1% do it. The 1%, that's how they do it. See, the 99% think, oh, I just do something for me and I ain't gonna do nothing for you. See, that's how we think. That's why we broke. That's why we control 1% of the wealth. That ain't how the 1% think. See, the 1% know, hey, I add value, I receive something for that value. That's life. Now, you ain't got to rock with that if you don't want to. That's fine. I'm going to be back on here every day, 365 days a year. So I'm going to find my people. Trust me, if you ain't my people, don't worry about it. It's 4.5 billion people who got access to the internet. And guess what? I'm going to be on here for 365 days a year, every single day. Promise you I'm going to find mine. I'm going to promise you I'm going to find my tribe. I'm going to find my tribe. Don't know about you, but I'm going to find my tribe. Well, appreciate y'all, man, for rocking with me. Lock it in with a thumbs up before you get out of this thing. Y'all go have a rest of a great Friday. Do something nice for yourself. Do something nice for others that don't involve money, right? Put some positive out in the world so you can get some positive back, right? Sit down and figure out your game plan. Remember, it's about W's and L's. As long as you got more W's than you got L's, you'll be fine, right? Keep that in mind. And like I said, man, I will see you guys back here tomorrow at 10:30 a.m. Eastern time for another live stream. We're going to talk about some other good information that could help you get to what? That pot of gold at the end of the rainbow. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. I'm going to catch you guys on the next one.